Okay, folks, we are live here. We are about to watch the Governor of the Bank of Canada, Tiff Macklem, give a speech about monetary policy and their views on monetary policy, the things that they've done over the past 2 years since the beginning of the pandemic that have gotten us into this situation where they've needed to raise rates incredibly high. You can see here I've got the stream in the background. This is just a foreword to when Tiff Macklem's going to come out and give us some key insights here, but I've got it on mute until we get started. So if you're just tuning into the live stream, let me know that you're here. You're going to be able to see yourself over here in the chat. No, don't want to move that. Move myself to point at it. You can see the chat up here in the bottom or the top left-hand corner of your screen. So let me know that you're here and you can see yourself sort of chatting there. Good to see everyone here. So this is again going to be an interesting speech from Tiff Macklem because just a couple of weeks ago, we got news from the Bank of Canada that they would be increasing interest rates by 25 basis points or 0.25%, a quarter of a percentage point, but also that they were going to pause interest rates for the foreseeable future, not planning on raising rates. Great to see people in here. We've got Sandra and Light and DR and Sarah and Gary, good to see you all coming in here. So the reason it was so interesting that we saw the Bank of Canada lock in interest rates or say that they're going to pause them at the very least is that this was a departure from what their counterparts were doing, right? Right now, the Federal Reserve recently raised their interest rate by a quarter of a percentage as well, but they haven't indicated to markets that they're planning on pausing yet, needing to sort of stay tough on markets and market expectations so that they can convince people they're going to get American inflation under control. The reason this is so interesting, at least to me, is that typically we see the Bank of Canada as the one that is following the trends of the Federal Reserve and Chairman Powell, Jerome Powell, in the States at the Federal Reserve. But in this instance, we've got the Bank of Canada making a decision that is different from what the American counterparts have made, and they've kind of been a setter worldwide. Oh my gosh, I can't talk today. Good thing we're just listening to Tiff Macklem today and I'm not talking the whole time. Yeah, so I think this is going to be really interesting to watch. The last time we got a speech like this was way back in at the end of December in 2022, and this was the first sort of admission of guilt from Tiff Macklem in the Bank of Canada that, hey, we might have kind of screwed things up right now, kind of screwing over Canadians as a result by not raising interest rates sooner. You'll remember back in 2022, and for those just joining us, we're waiting for Tiff Macklem, the Governor of the Bank of Canada, to take the podium and give us a speech here. You'll remember that at the beginning of 2022, the narrative within the Bank of Canada was that all this inflation we were experiencing, well, it was going to be transitory. It was going to be here one day, gone the next. It would be short-lived, mostly caused by conflicts in the Ukraine or Ukraine. I apologize. I always mess up saying the country. The war in Ukraine, as well as sort of global supply chain issues from the pandemic. They're saying this is the reason we're seeing inflation. But that was not what happened, right? They're saying this is going to be transitory, so they didn't raise interest rates because they thought it would handle it itself, sort of, we wouldn't see inflation as a result of this over the long term, but that's not what happened, and they needed to go extremely aggressive on interest rate hikes because they didn't start these interest rate hikes earlier. And this is one of the key mistakes that they admitted in their December speech. So it's going to be interesting here to see if Tiff Macklem even goes down this road again, right? The talk is called Explaining Our Monetary Policy. So he's probably going to talk about quantitative easing, how they used that to stimulate the economy at the beginning of the pandemic, the interest rate decisions of the Bank of Canada, and also tomorrow we are set for the first time to get the actual minutes or the notes from the recent Bank of Canada Board of Governors meeting where they decided what their next interest rate policy decision would be. This is something that they do at the Federal Reserve. They sort of release meeting notes after the fact so they can show the deliberation between the people in the room, sort of explaining why they made the decision they did. But we've never gotten this from the Bank of Canada, so we're going to get that tomorrow, talking about the previous rate hike. So that's pretty interesting to watch. And let's listen in and see if we're getting any insight here from the stream. And let me know that if you can hear this okay. Okay, this is in French right now. I'm hoping that it wasn't all in French.
Au ministère un doctorat que cette année, il écrit
Okay, so far he's just been doing it in French, so let's hope that Tiff isn't only going to be speaking in French today, because that would be not a great thing for the stream if we're having to translate live. But while we wait for Tiff to come up and sort of see what language he's going to be giving this speech in, I'm going to sort of take some comments or questions from the comments here. I'm seeing a lot more people joining us in the chat. We've got Cindy from Campbell River, BC, and Mark talking about the Bank of England increase and not stopping the increases. We've also see Keith in here from Frigid Montreal. Good to see you, Trev, Alex, Kaya, and Light, and Sandra. A lot of great folks in here, and here is Tiff Macklem, so let's listen in and hope that it's not entirely in French for us today.
Merci Jacques pour cet accueil si chaleureux. C'est quelle journée belle ici aux villes du Québec. C'est un grand plaisir d'être au Québec pour vous parler de la politique monétaire et de l'économie.
So far, just French. Can anyone find a translated stream link for this? Sometimes we have translations here, so we can listen in on this. Let me put this here, perhaps. And we'll see if we can find another version of this stream. And drop a link in the chat if you can find it. Yeah, this is CFA Quebec. Maybe we can get a translated stream. This is what happens when we go live, folks. You never know what's gonna happen. Sometimes the Global's YouTube channel will have like a translated version of it, or CPAC maybe also. Yeah, here's CPAC. Any translation here? No translation here. We might have to turn to CBC News if they have it live.
In 2022, we faced an overheated economy.
Nothing live here from English on the main stream. Okay, we're good.
The year ahead will be different.
We're all good at folks. All good at. Let's listen in. More insight to come.
At its current level, conditional on the outlook for inflation. We're pausing to assess how well our interest rate increases are working to bring inflation down. With inflation above 6%, we're still a long way from the 2% target. But inflation is turning the corner. Monetary policy is working. Et voilà précisément le sujet de mon discours. Comment la politique monétaire permet de contrôler l'inflation.
Okay, so typically what we'll do is we'll sort of turn it down during the French bits and turn it back up, because most of the people who watch this channel are English speaking primarily, because of course all the videos on the channel are in English. So one thing that he mentioned there was that, hey, our pause is not necessarily because we know that inflation is going to be tackled, but it's a pause to see what happens with our monetary policy decisions that we've already made. Of course, he's talking about the 4.5% increase to interest rates that has sort of happened since May of 2022 at a record pace, right? The idea right now is like, hey, maybe we're not seeing the impact of these interest rates fully in the economy yet. It hasn't sort of worked its way through to impact the inflation numbers that we're seeing. Of course, in industries that are more interest rate sensitive, well, then we've seen a lot more impact from these interest rate increases. The industries like that we're typically talking about, real estate is the first one to feel it, right? Directly correlated to the interest rate decisions of the Bank of Canada, because it defines how easy it is to qualify for more money to purchase a home. We've already seen the impact of this with a slump in housing prices, but Tiff Macklem and the Bank of Canada seem to be saying here that, hey, we expect this kind of recessionary environment, the impact of our higher interest rates to cycle its way into other sectors of the economy as well.
Mais comment ça marche? En théorie, notre approche de politique monétaire.
Yeah, exactly, fallen corpses. What a name. In other words, we're stopping interest rates to wait and see if anything breaks. That's exactly right. Did we break things by raising interest rates so incredibly quickly? Or did we do things properly and sort of raise it and stop at the right point? So that's going to be interesting to see, like what actually happens here from the Bank of Canada, and we might get insight on as to their true thoughts about this in the release that's coming up tomorrow. Right? We talked about that minutes from the meeting that they had before they made that decision to pause.
Au moins trois choses viennent compliquer la politique monétaire. Premièrement, notre taux directeur a un effet indirect sur l'inflation.
DR, I'm not familiar with that. No.
Il faut jusqu'à 2 ans pour cet effet se hausse pleinement sentir. Et pendant le temps, l'économie et l'inflation évoluent. Il faut donc anticiper la trajectoire de l'inflation. Et troisièmement, comme les choses changent constamment, il faut
Okay, so I'm trying to sort of translate a little bit here in my head and talk about what they're talking about specifically, and they're talking about the way that they've projected the way that they've projected inflation to go over the next number of months. If you missed it during this last Bank of Canada meeting, they provided their monetary policy report, which shows what the Bank of Canada thinks is going to happen with inflation moving forward. Now, with interest rates staying where they are right now, they actually believe that we'll be down to 3% inflation by the summer of this year. They said by the end of the second quarter of 2023, which is the start of the summer, right? Because the quarters like January, February, March, April, May, June, July is third quarter. They said by the third quarter, we'd expect inflation to be back down at 3%. And by 2024, sometime in 2024, they've projected this to be back down to 2%. Obviously, critics are saying, how much do we trust this, right? Because the Bank of Canada is incentivized to tell people we've got it under control, what we're doing is going to work, because that's one of the tools they use to manipulate the economy is forward guidance or setting Canadians' expectations. If more Canadians believe that inflation will come down, it's more likely that inflation will come down, because if people believe that there will be higher inflation, they're going to go out and spend their dollars today, creating more demand in the economy, because tomorrow it's going to be more expensive, right? So inflation expectations are inflationary, and lower inflation expectations have a lower impact on inflation, right? Hey, Alex, how's it going? Good to see you. Sir David, Nikhil. A lot of this is in French so far.
Ont aussi des effets ailleurs dans l'économie. La construction se modère. Les ménages qui ont un prêt hypothécaire ont moins d'argent à dépenser. La production ralentit à mesure que la demande s'affaiblit. Les entreprises peuvent réduire le projet d'investissement à cause des coûts d'emprunt.
If anyone
plus
can find a
élevés
translated
ou de
stream
la
here, that would
baisse
be
de la
awesome.
demande.
I'm looking on my other tab here as well.
Les taux d'intérêt plus élevés au Canada rendent aussi le pays plus attrayant aux yeux des investisseurs étrangers. Ça veut dire que si rien autre ne change, le dollar canadien va s'apprécier. Ainsi, les biens étrangers deviennent plus abordables pour les Canadiens et le pays importe moins d'inflation. À l'envers, les exportations canadiennes de biens et services deviennent plus chères.
Yeah, it's
ce qui
interesting, Matthew. We've
ralentit
got the Bank of Canada and the Fed having a speech at the very same time. That might be another thing that we can sort of listen into while he's on the French sections is some of that the Federal Reserve meeting, because that has impact on Canada significantly.
une bonne chose, sauf quand l'économie surchauffe. Quand la demande dépasse l'offre, l'inflation subit des pressions à la hausse. Un ralentissement économique permet à l'offre de rattraper la demande, ce qui réduit les pressions inflationnistes. La politique monétaire
Okay, so this is staying more and more French. So we're gonna sort of flip between this and what I have here in my other tab here. We're gonna mute this and listen in on the Federal Reserve speech here, because that is going to have impact on Canada and investments in Canada more specifically, far more than maybe even the Bank of Canada's decisions are.
Ukraine war that are affecting inflation and make you nervous about where inflation might be going.
We have the tools, the Fed has the tools to achieve our 2% goal over time. But inflation in the United States is, of course, very closely related to things that happen here, including the balance between supply and demand. It's also affected by, for example, commodity prices that are really set on the global markets. Oil and main agricultural commodities are priced globally. So there are certainly, it's an integrated global economy and global markets, and we are part of that.
So you get data from all the various government agencies, but do you ever use anecdotal things, like you go to the supermarket and you see prices are high and you say this price is high, or do you ever get anecdotal things, or people ever call you up, or friends, and say, by the way, you should do this or that? Do you ever get that kind of information, or do you only get it from the government reports?
Actually, it's probably better for me to have.
I mostly get data, but I will say I do believe that anecdotal information is very useful, and one of the things the reserve banks are great at is all 12 of them have big operations where they talk to businesses and nonprofits, universities, every sector of the country and the economy, and they bring that back to the FOMC meetings and they talk about what they're seeing, because often, staring at data is great, but you need to have a story, and I think hearing the stories that people tell, it does help me to sort of assess what's going on out there.
So as the chairman of the Federal Reserve is obviously an important job. How do you reduce the stress level you have? I mean, you can't be watching economic numbers all the time. So what do you do to relieve the stress other than interviews like this?
So I think the move is to is for us to sort of flip around here. I want to take a look at some articles that we've recently sort of just seen posted and sort of show you guys what I do for my analysis for the videos and sort of talk about these new headlines right now, unless BNN Bloomberg has a translated stream of Tiff Macklem, which is what we will check right now.
En moyenne, de janvier 2022 à janvier 2020.
Okay, so Canadians now expected to need 1.7 million in order to retire based on a BMO survey. Basically what I'll do for my videos is I'll take a look at all of these sort of headlines and what people are talking about and sort of bring together a whole bunch of different information from all of these stories that sort of can make a more overarching story that sort of gives us a better perspective rather than these individual stories, connecting the dots, right? Canadians now expected to need $1.7 million in order to retire based on a BMO survey. Canadians now believe they need $1.7 million in savings, to retire, a 20% increase from 2020. So just in 3 years, that number has gone up 20%. The eye-watering figure is the largest sum since BMO first started surveying Canadians about their retirement expectations 13 years ago. Everyone's feeling the rising cost of inflation. And so not surprisingly, we're seeing that Canadians are feeling they absolutely will need more to retire. Canada's inflation hit a 4-decade high of 8.1%, again, after the Bank of Canada sort of failed to raise interest rates as quickly as they likely should have. I'm going to make this a little smaller so you guys can see things. Or actually, I'll move chat over here just for the time being so that we can read through this together. Wow, that is wild. $1.7 million in order to retire. Most people will sort of do that by the 4% rule. If you guys aren't familiar with that, maybe this is something that'll be helpful for you. This is a good way to determine whether or not you're ready to retire. You sort of take the amount of assets that you have, and if you can live on just 4% return on that $1.7 million, then you are in a place where you can retire, right? If you could get a 4% return on the sum of money that you have and live off that return, then you're not going to sort of run out of money as you're sort of living on the returns of your savings. The 4% rule, that's a good one to take a look at. Let's listen in on Tiff.
Aussi touché les
Still
gros
French.
achats.
Great. Maybe we'll get some English questions at the end, but that might not be the case today. So while rising inflation may require tweaks to a retirement plan, saving more each month if you're a young worker, making cash flow adjustments if you're nearing the end of your working career, those changes don't need to be drastic. 53% of Canadians didn't know how much they will need to retire. Yeah, 4%. Yeah, but yeah, we see you saying 4% is a pitiful return. But if you want to move into sort of lower risk items, right? Like you probably do when you're in the wealth preservation phase of your life, then 4% isn't that bad if you can get a sustained 4% return and you're just using it for your retirement, right? The BMO survey was conducted between November 4th and 7th, 2022. Okay, so a little while ago, but we're getting this insight now. Huh, that's interesting. I wonder if we can find that BMO survey. Like this is, sometimes you get an article like this one, and you're like, okay, you sort of took out some of the findings of this survey, but what are some of the other findings that we can actually get to here? So this is like a BMO retirement expectations survey. Is that probably the best search? And we go into news and see if any of them link to it, because I didn't see a spot to find that link. BMO retirement expectations. Maybe we just leave it at that. Okay, Advisor's Edge. Maybe we get a link to the survey here. Or is this just like a carbon copy of the exact same cloned article? Sometimes the Canada Post will, or not the Canada Post, Canada Press will write an article and then just send it out to all of the news agencies, and then they'll all just post the exact same thing. So that's pretty wild.
Taux de chômage dans chaque
Still
groupe
French from
d'âge
Tiff
et
Macklem.
chaque...
Let's see if Chairman Powell is saying anything interesting at this point.
The data and then come up with the right solution, right? That's mostly it.
I think the biggest challenge we face at the Fed is completing the process of getting inflation down to 2%. And what I want to point out is that we're seeing disinflation in the goods sector. We expect to see it in the housing services sector, and these are the three parts of the core PCE inflation index that we look at. There's 56% of the economy, which is the rest of the services sector. It's the biggest part, obviously, and we're not seeing disinflation there yet, and that's going to take some time. And we need to be patient, and we think we're going to need to keep rates at a restrictive level for a period of time before that comes down.
So when you made your speech the other day, when you talked about the Fed discount rate, you used the word disinflation 11 times. Not that I'm counting, but 11 times. So you were saying that disinflation is beginning to appear. Would you use that word 11 times again today after the jobs report, or you would be less inclined to use that word so much?
I might use I would certainly use the word disinflation, yes, which means declining inflation, and I would call it declining inflation too.
That's in terms of the rate
and
of
decline
decline
what
of
about
the interest
the
rate percentage, not
the
actually
debt,
lowering of
total
prices.
debt of
That
the
would be
United States,
deflation.
which produces some inflation, with 31.4, leaving aside the debt limit. Are you worried about the total indebtedness of the United States producing inflation, or you don't think that's a big problem?
Yeah, it's not the level of debt. I would say the thing I'd say about the level of debt is really, it's not. First of all, it's not the Fed's job, but I would say that we're on an unsustainable fiscal path at the federal government level. That has been the case for some time, and it's something we will have to deal with. And it's better to deal with it sooner rather than later.
Now, many of your predecessors were economists.
Interesting. You hear him talking there about disinflation versus deflation, right? And this is the concept that is important to understand if you're listening in on some of this kind of reporting. Disinflation isn't saying we have deflation, right, where prices are actually negative year over year, but the rate of inflation, the percentage change of inflation is lower, on a lower trajectory than it was before, right? So if we have inflation go from 8% down to 4%, that is disinflation, not deflation. So that's an important thing to consider as well. Maybe we can actually do this, so we'll actually see chat a little bit better. Let me just play around with this. You guys are getting to see behind the stream a little bit, some behind the scenes today, given that Tiff Macklem is speaking only in French right now at the during his speech. But another important thing that is happening today that perhaps we could tune in on here is the meetings with healthcare ministers in Canada. Right now, obviously, there's a ton of controversy about healthcare funding in Canada, with provinces saying, hey, we don't want strings attached to the money that the federal government gives us. People are thinking that the federal government is proposing $100 billion in healthcare funding going out to the provinces as of this meeting. We haven't gotten the results of this meeting. That's just what some sources are saying. But the controversy is the government wants to say, okay, you need to make sure your data management of all of your healthcare data is managed properly and is like actually digitized and able to be shared effectively between different doctors to make the processes more quick. But some provinces are saying, hey, it's not your jurisdiction to tell us how to do healthcare. So kind of like screw off. So we've got some comments here from, first, I know that a lot of you are from Ontario. Here's comments from the man, the myth, the legend, Doug Ford, on
Ford, could you give us your thoughts?
his thoughts on health
We
insurance.
haven't heard a lot from you. What do you think about what's on the table?
Well, first of all, I think this is a great first step. We've been asking the Prime Minister to come to the table. He's at the table. And this is about certainty and sustainability. It's about building a health care system across this country, not for 5 years, not for 10 years, but for decades to come. And we look forward to sitting down and having this conversation with them. Okay, thank you.
Deal by Victoria Day for Ontarians?
Well, we'll have a chat and then we'll come back to you today. Thanks so much, everybody.
Okay, so it looks like we're getting more comments from Dougie in just a minute after this meeting, and then we also have comments from Trudeau, the person who's like running this meeting, it seems. Which is also interesting because his federal minister for healthcare was supposed to have a meeting last month, but apparently it didn't go so well. Like, he met with all the premiers and all of their health ministers, and he said the premiers were all very demanding and they weren't willing to sort of compromise, and it was just like orders from the provinces. So it seems that maybe Trudeau has taken over here in more of a lead role in terms of managing this healthcare debate.
Bonjour tout le monde. Je suis très content de pouvoir m'asseoir en personne avec les premiers ministres des provinces et territoires cet après-midi pour parler d'un enjeu que les Canadiens tiennent énormément à cœur, nos systèmes de santé et surtout les résultats concrets qu'on peut livrer dans le court terme, mais surtout pour bâtir un système de santé moderne pour appuyer les Canadiens dans le long terme, dans les années qui viennent. I'm really pleased to be here today to sit down in person finally with the, after long years of virtual meetings and phone conversations, to sit down in person with the premiers of the provinces and territories to talk about an issue that really matters to Canadians, how we're going to make sure that our healthcare systems are living up to Canadians' expectations. Obviously, it's been a tough few years, but there's a need for support now and better results for Canadians now, but also into the coming years as we build a more modern system that will respond to the challenges of the coming years. I'm very much looking forward to it. Also looking forward to sitting down with Premier Smith in a few minutes. Merci beaucoup tout le monde.
Okay, interesting. So just comments about needing things to be modernized in order for this funding to come through. It'll be interesting because a lot of the time with these healthcare deals, they need to be negotiated on a province-by-province basis. So that is interesting as well. Let's flip over and see if we can get back to Chairman Powell, and I'll get
it's a process of
information.
To go back to the jobs discussion, if next month you had another 519,000 jobs created, net jobs, would that be good or bad from your point of view? Have we a lot of people working, but maybe producing more inflation?
So we don't have the luxury of thinking about good or bad. It just is what it is. So, but I would say again, most analysts, most economists would say that to get inflation down from high levels that we've had, if you look at history, there is some softening in labor market conditions that goes along with that, and that is still, very possible and likely here. Some softening in labor market conditions. However, this cycle is different from other cycles because of where it came from, and it's just confounded all sorts of attempts to predict what it would do. So it is good that we have seen a very strong labor market, but at the same time we're seeing wages moderating. Wage increases are still very high, but wage increases have come down to a level that is closer to what would be sustainable, still well above what would be sustainable with 2% inflation. And same thing with inflation. Inflation is starting to come down and the labor market hasn't softened. We do expect that it will soften. But it will do what it will do. Our job is to get inflation down to 2% and preserve maximum employment.
So that's interesting. We hear the chairman, Jerome Powell, at the Federal Reserve saying, well, the job market's going to do what it's going to do. Right now, the jobs market in the States is very similar to Canada in that it's still remaining tight, even though they've raised interest rates significantly. Also, we have some translations coming in from a friend in the chat, Dar R, translating what Tiff Macklem is currently saying during his sort of speech that's going on right now. Here's a quick update. He's sort of showing some charts here. And based on what Darar is saying is that we're still shooting for the 2% target, but with caution. So maybe they're not as entirely sure that they're going to be able to lock in that 2% rate by 2023, given their sort of caution that they've advised around it. Commodities are reducing, but services are not because of labor. Interesting. So by saying that, they're saying that like maybe I should put this chart back on the full screen side of things so you can sort of see what they're saying here. Beautiful. And get this live. But it seems like what they're talking about here is that commodities are reducing, but services are not because of labor. So things that typically are impacted by higher labor costs, those services are not coming down, like the price of those things contributing to inflation is what the Bank of Canada is saying. Whereas commodities, things that are less tied to the Canadian markets, in the Canadian sort of job situation where people are having to still offer higher wages to get people to work in their businesses, those commodities that are less impacted by the Canadian jobs market, we're seeing inflation come down in those sectors based on this translation. What was that? Interesting.
I'm not going to be any better off waiting to next year than now, because rates aren't going to come down that much at the beginning of next year, so I might as well get the house now. Mortgage.
So surprisingly enough, I get a lot of requests for advice on those kind of things.
And you don't give any?
And but I really can't.
Okay.
I really can't respond.
So, so on the whole, to summarize where you are, you're basically saying that the jobs data that came out was a little bit surprising, but in the end, you've taken it into account, and you're pretty comfortable with the guidance you gave last time, and you're not prepared to give anything that's completely different guidance than you gave last week.
Well, I mean, this is a world in which we've had the labor market report, and I think that does. I think it underscores the message that I was sending at the press conference and in the meeting, that we have a significant road ahead to get inflation down to 2%, and I think there's been an expectation that it'll go away quickly and painlessly, and I don't think that's at all guaranteed. That's not the base case. The base case is for me is that it will take some time, and we'll have to do more rate increases, and then we'll have to look around and see whether we've done enough.
Okay. And 2% is the rate we had for the last 25 years before inflation came along. But prior to that, for most of U.S. history, we were higher than 2%. Is it that 2% we're now so used to 2% after 25 years of it that you think that's the appropriate level?
So we went through this long period where inflation was really anchored around 2%. And we think that, and economists think that that's because people start to expect 2% inflation. And inflation, it's in a way, if everyone expects that prices are going to go up, prices and wages are going to go up 2% per year, then plus productivity in the case of wages, then it will. That's what will happen. Having price stability, real price stability for an extended period of time, is just enormously beneficial to the public, because you can then, on the back of that, you can build a very strong labor market, as we had. We had a labor market with really 3.5% unemployment in 2018 and 19. And we had inflation running, just barely getting to 2%. Wages moving up the most for people at the lower end of the spectrum. And so this was we all want to get back to that place, but the bedrock of the whole thing is to get inflation under control.
The unemployment rate hasn't come down as much as people are going up as much as people thought. In part, some people say because we don't have as many immigrants coming in the country, legal immigrants coming in, taking some of the jobs they otherwise would take. Do you think immigration is an issue in terms of giving us more labor workers, or do you think that's not a factor?
So just as a matter of arithmetic, it was a factor because there was very little migration across borders during the pandemic. And that was part of what was happening, particularly in certain sectors like the agricultural sector and food service and things like that, where there just weren't the people. However, just very recently here, the immigration data have turned up again. And I think that may be part of why people are feeling somewhat less pressure in the labor market to find workers. This is an issue not for the Fed, though. Immigration is obviously a political issue. We do not seek to be a player on this. But it's just a fact, though, that right now the United States has fewer available workers than it has jobs plus job openings.
And when you increase interest rates,
okay, interesting stuff here. Interesting stuff here from Jerome Powell at the Federal Reserve. Also replying to some of these comments that have recently come in the chat here. Do you think people, this is from Jeffrey Stone, do you think many people took fixed mortgages in the last 5 years with the Fed and government constantly saying rates would not go up? So I don't know about how entirely accurate that is over the last 5 years, but certainly at the beginning of the pandemic, at the beginning of, or like in April of 2020, that was when the Bank of Canada was saying, hey, we're not going to raise rates. And this is, again, their forward guidance. The communication that they give to Canadians is a large part of their tool belt of how they can impact the economy. But they were certainly saying, hey, we're not going to raise rates until probably 2023, midway through 2023. Of course, they had to sort of move those plans up significantly when they saw inflation was getting out of control back in April, May of 2022. So I think that there are a lot of people who saw how low rates were and expected rates to remain low for a long period of time, because that's what they were told by the government and by the Central Bank of Canada. And now they're in this situation, especially a shitty situation if they're at a variable mortgage, right, where rates have gone up so dramatically. For people who may have locked in around the 3.5% pre-pandemic, right, in that sort of 2018, 2019. Well, now we're sort of starting to get to the point where even those mortgages are coming up for renewal, and it's likely, unless they refinance when rates were super, super low and lock that in, that those refinances are going to be, or not necessarily refinances, but sort of porting of that mortgage to a different lender, or sort of an agreement at new terms and new interest rates. All of that impact is going to hit Canadians rather abruptly. So it's going to be interesting to watch the market and see if this impacts default rates on mortgages. I think that that's sort of like the last thing that will happen, because Canadians are sort of bought into this idea that owning a home, that's their most important thing. Put all of your money into your home to make sure you don't lose it. So that's interesting to consider. And let's flip over here to good old Tiff. Still rocking it in French. I've got actually a couple interesting articles that I want to go over here with you just for a second. One about one of the things that we talked about just recently in terms of the healthcare deal that we just saw, that the meeting starting for. Let me actually go in here and make this full screen and zoom in, and maybe I can make this more visible to you. I gotta set up scenes so I can do this on a whim, do it super quickly. We're gonna go down to this size so you can still see chat, and we'll zoom in on my end. So talking about the healthcare meeting that's going on in between the Prime Minister and Premiers right now, this is another interesting thing that's going on today, right? Here's what Canadians want. A high-stakes health summit begins. This is the health summit that is going on right now. We're looking for a significant shift. I'm curious what your thoughts are on this. As Premiers gather in Ottawa for a high-stakes health summit, let's zoom in more. A majority of Canadians say they want to see more funding for healthcare, but many also want plans attached to increased spending amid concerns about how the provinces allocate health dollars. Obviously, big controversy here, the Ontario government asking for more money from the federal government to fix healthcare when the provincial government is actually running a surplus right now, or seems to have a lot of money on hand. So some people are criticizing that. Trudeau and the 13 premiers will sit down for this meeting in Ottawa today to see what's going to happen here. They've been calling for a major influx of cash to the tune of $28 billion. They say the Canadian health transfers providing $45.2 billion to the provinces and territories per year will increase to $49.3 billion next year, and that only covers 22% of the total health costs, and they want that to raise to 35%. Wow, okay, so that's going to be a significantly higher number if they get what they want, right? Like another 10% onto that. Essentially, we'd be up into getting close to sort of $58 billion provided for health transfers. Senior government official with knowledge of the plan told the Canadian press that they're going to lay out a 10-year offer when he meets with the premiers. and Global confirmed that. He said he won't be signing any deals during the meeting today, but will be focusing on how to improve outcomes for patients. Canadians also appear to agree that more money for healthcare improvement is needed, but they don't believe it should come in the form of a blank check, according to the results of the new poll. So it seems like based on the results of this new poll, they're talking about that folks are more on the side of the federal government and what they've been saying, hey, we want to give you money, but we're going to have strings attached to it, right? So that's interesting to see as well. And also to sort of close the gap that we've seen with Tiff Macklem speaking only in French during this meeting, we've got a new article from the Canada or from the Financial Post going over some of the key things that were said during this press conference. So even though we didn't get any English sound bites to go over today, we do have some information here. The main point being inflation is turning the corner and monetary policy is working. We're seeing it work. Again, language the Bank of Canada is incentivized to talk about. So that's interesting. The Bank of Canada Governor Tiff Macklem said on Tuesday that no further rate hikes will be needed if, as expected, the economy stalls and inflation comes down. The central bank has, over the last 11 months, lifted rates at a record pace to 4.5% to tame inflation, all the way from 0.25% up to 4.5% in just 11 months, 4.25% increase to try to bring down inflation, which is 6.3% in December, way above the 2% target, even way above the 1 to 3% band that the Bank of Canada is looking into. If new data is broadly in line with our forecast and inflation comes down as predicted, then we won't need to raise rates further, Macklem said in this speech to financial analysts in Quebec City. Well, that's why it's all in French, folks, is that it's in Quebec City. Inflation is turning the corner, monetary policy is working, but we're going to be in a sort of recessionary period with growth close to zero through the third quarter of this year. The idea of a recession is 2 subsequent quarters with low or no or with zero growth, right? That's the definition of a recession, if I'm not mistaken. So it's like the Bank of Canada saying, hey, we're gonna see a recession, or at least something that looks like a recession, but they're currently saying this won't be as bad as the 2008 financial crisis. It's not going to be as prolonged a recession. This is also interesting because people are talking a lot about a potential of a double dip recession, right? If you're not familiar with the term, a double dip recession is this idea that we think we get inflation under control. Maybe the Bank of Canada and the Federal Reserve start lowering interest rates again to try to stimulate the economy, because maybe they went a little bit too far on raising interest rates, went a little bit too quickly, and they bring down rates a little bit, but they do it too soon, and that prompts more inflation, right? That's why the Bank of Canada is really focusing on trying to kill inflation the first time, because they don't want a double dip recession where they lower rates again, stimulate the economy, that turns out to be inflationary again, and then they have to hike rates all over again, sort of prolonging this period. What they want is to end this, like get through this recession and get to a period of stable inflation, just like they've had over the past decade. Some people think that this actually isn't going to happen because the world has fundamentally changed. This is one of the arguments, right? Let me actually make chat a little bit bigger as I'm talking about this stuff. Yeah, some people are saying that the world has just changed, and that's something that we need to consider here, is that this could just be a different world that we're living in today, especially in terms of inflation worldwide. Because one of the things that has caused low inflation is the globalization factor, right? Over the past decades, we've seen an increase in global trade, and that allows Canadians and Americans and everyone who imports from countries with lower labor to benefit from the lower prices of that lower labor cost that they sort of get by outsourcing their labor to lower wage countries, right? And that's a disinflationary impact, maybe even a deflationary impact, because it drives the price of producing goods down. Imagine we were trying in Canada to build a TV manufacturing plant. You had to pay everyone the same minimum wage. We don't have the economies of scale of creating these things, as opposed to importing them, where we can get TVs for an incredibly low price, right? That it seems like the price of TVs goes down every single year for what you're getting, and that's the sort of deflationary impact of globalization. But as we go into this new world, where everyone's reshoring all of their work, reshoring all of their labor, well, maybe prices are up and will continue to raise over the long term because of this sort of systemic change, right? We're scared of fragile supply chains because of COVID. We're worried about having supply relationships with potentially hostile countries where we don't know where things are going to land geopolitically. So we're bringing all of our supply chains back within our own countries or with our close allies. But of course, that is a higher impact on prices, right? It's going to cause prices to go up with higher labor costs. So that's something to consider. Maybe we've just entered this entirely new world.
Travaillent moins de 50% de leur heure normale. Donc, c'était une situation très grave. Il n'y avait aucun vaccin. Il y avait beaucoup d'incertitudes. Nous avons répondu avec beaucoup de force et avec aussi les mesures budgétaires. Nous avons eu la reprise.
That's interesting that they're talking about the federal budget. We're expecting to see a federal budget be released either in March or April of this year from Christopher Freeland in the finance department. And it seems like they're going to rein back the spending. All the things that they promised they were going to do, or many of those things could be delayed with less spending happening in this upcoming budget because they're scared of pouring fuel on the inflationary situation. Just like the Bank of Canada is, right? So they're trying to stay out of the way, just like the IMF told them to, right? Don't spend as much money as you were planning on because it could cause more inflation. So it's going to be interesting to see what's inside that budget, where they're planning on cutting back the spending, and whether or not people are going to be okay with that. Because I know a lot of folks are frustrated about the government saying, okay, well, we're going to cut our spending here, but also we're not going to go after all of the business subsidy sort of fraud that happened, or the potential fraud that happened with the Canada Emergency Wage Subsidy. The CRA sounds like they don't really want to go after that. All the concerns around the McKinsey consulting contracts and those inflated values, the inflated amount of people working for the government. Some citizens are saying, well, okay, you're cutting back our social programs and cutting back on these promises, doing less on these promises right now, but you're also sort of spending in these reckless ways in other places, which can kind of be frustrating for many Canadians. So I think our best point forward here, folks, is to wait for the governor of the Bank of Canada's speech to be translated and for the notes to come out tomorrow as to like why they made the decisions they did, because this seems like this is all going to be in French. But before we wrap up the stream, I want to provide a section here where folks can ask any question you want. Maybe we get into some topics that we weren't planning on getting into today before we close off this stream for the day. Of course, I always appreciate you guys coming in here and liking the video and subscribing to the live streams because I think I want to do this a little bit more, going over some of the stories, maybe even sharing some of my research with you folks and like doing my research live in the way that I sort of read all of my articles and sort of compile that into what I can make videos. Let me know in the chat if you think that that's something that you'd be interested in watching on a live stream on a more regular basis. But if you want to ask any questions directly in the chat, you can go at Russell Matthews and let me know if you have any questions in there as we sort of get ready to wrap up this stream. If we don't get any English questions here from Tess.
De production ou ce qui est de l'écart de production canadienne, bien sûr, est basé sur le taux de chômage naturel, donc le fameux Nehru. Est-ce que ce concept-là est encore utile?
Candace likes the idea of more live streams. Candace is one that, or Mountain Finance, he always does great live streams, I think weekly on Sundays, so you should check those out for sort of financial things. All the topics of the week, it's good stuff.
Oui, deux choses à souligner. Premièrement,
Laura Lee's saying, definitely, Key, enjoyed the stream. Awesome. Well, I think with that, we're going to wrap it up, folks. And keep your eyes peeled on the channel. Hit the notification bell because we could be sort of doing more streams like this one where we talk broadly about a bunch of different topics related to the Canadian economy, Canadian financial news, and maybe even some sort of lower pace, more relaxing research sessions where you can join in on me and sort of see how I'm learning the information that I do. But with all that said, thanks so much for tuning in, everybody. I appreciate you hanging out here with me. I get to know you more directly one-on-one, and I'll see you next time, everyone. I'll see you in the next video. Have a good one. Happy Tuesday. Hope you have a good week.